Hi, Greg Womack here. Thanks for tuning in. I'm with Womack Investment Advisors. We help people manage money. You know, I get a lot of clients ask me, Greg, are we getting ready to go into a bear market, which is a downing turn for stocks? Or how long is this bull market, since we've had since 2009, how long is it going to last? Well, I just want to do a brief little information here to introduce you to some concepts that we use here at Womack Investment Advisors to help people manage their money, but also to be protected in case there is a big, ugly, bad bear market. So I want to talk a little bit about history. So the markets, as you can see, since 1900, the beginning here, have gone through major ups and downs. And when the markets, this red here, you may not be able to see the chart, we'd be glad to send them to you. Just request them after our presentation here. But there's periods where for 20 some years you could go into a bad market where the markets don't do anything or they're down, and periods in the green where they're called bull markets, and this is where the trend is up. So there are periods here, but what we see down here is price valuations. When these things get too high during a bull market, stocks get lofty. And so today we're getting there. We're getting probably in the late stages of a bull market where stocks have been trending up since 2009. So eventually they're going to turn the other way. Nobody knows exactly when. We're starting to see some signs of high valuation stock prices, and they do have to come down typically substantially to a 10 PE ratio or lower. And right now we're on the Case-Shiller Price Index. It's a ratio of measuring how pricey stocks are. We're at about a 30. So we're getting up there where the historical mean, where the market has corrected. Let's hit the next slide real quick. So when you invest at the top of a bull market, and I'm not saying we're at the top yet, but we could be near the top. When you invest in the top, the next 10 years, your returns typically are low single digits the next 10 years, because at some point you go through a bad bear market. But if you invest when the price to earnings ratio are lower, the next 10 years, your average rate of return could be nice double-digit returns 10 years going forward. So this is going back to 1881 on this chart. We'll be glad to send it to you, so just let us know. So here's my point. Next chart, please. What we're looking at is the market. This is 2000 tech market, where the market lost 50% of its value. Then it did recover finally. Then it went through 2008 and lost another 50%. So what we here at Womack, what we want to do is let's participate in these up years, but let's try to avoid these big down years. So that's what we do. It's a tactical approach versus a buy and hold, or what I call buy and hope. So what we do is we are disciplined, not emotional. And we develop a strategy for our clients, and we manage that according to very disciplined results. So all that said, here's what you can do. What should you be doing today? I encourage people to look at their risk levels, how you're invested, and determine whether you need to make some changes. And we could go through some more upside, but more than likely at some point we're going to go through a major bear market, and you want to be prepared. So fill out the free risk report, send us a note, we'll send you these charts. We look forward to talking. Thank you for tuning in.